Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Welcome back. Thanks for tuning in. Great to have you with us. Alex and Eva with you today. Broker Daily Uncut. I'm a bit out of touch, Eva. I've been in the UK.
Yep.
Never an enjoyable experience for me, but something I have to do every year to go back there. Though the football's been good. My club, Derby County, has had 3 wins on the trot, including a hat-trick win over the weekend. So there are some small blessings.
You enjoyed that. What about the weather? In October, it would have been horrible.
Standard stuff. It's never really very extreme there. Kind of just drizzles, and you're never really too sure whether it's day or night. But but yeah, no, life just kind of rumbles on. But
You're back.
I'm back, and I've been trying to catch up with sort of a few things that have been going on. I've been reading the news, as I always do when I've been away. Very interesting developments. I have just gone through the process of purchasing in a trust, and it was unbelievably painful. I mean, it's always difficult.
Yep.
I know for brokers that work in that space, it's always very, very hard. But this time, it completely broke down. And I see in the news, I know I wasn't using Macquarie, but I see in the news that there's been a major development with Macquarie Bank. Do you want to give me some insights into that?
Yeah, so that was huge news. And look, we, as at Finni, we do a lot of trust lending. Like most of our clients are investors. We do trust all day, every day. We sort of knew at some stage something's gonna happen. It can't go on forever. There's too many moving part there that are not so, I guess, ethical in some ways. We didn't know where it would come from, who would do it first, and then Macquarie just decided out of the blue we didn't see it coming from them, I guess. Just an email saying we're stopping trusts altogether, no more. Pretty much from next day. There was no lead up to it in a month's time. It just we are not doing trust anymore.
It was quite an odd announcement from any major organisation to say to sort of reference social media,
and they reference social media.
That was really unusual,
very unusual, but also very. I think it's probably it was needed, and that's going to get people to talk about it and see what's going on. And so I very much respect and appreciated the fact that they put that in there.
Yeah,
as a reason.
Before we get into it. I'm sure most people tuning in will be familiar with the trust structure, but there'll be those that are listening that aren't. So why would it's an investor, I assume largely an investor, maybe a business owner strategy. Why would you choose to purchase within a trust? What are the benefits? Yeah,
so what you're saying is very much why and when trust should be used. But what we've seen lately in the last maybe 5 years is people that don't really have the income or don't have the big assets to actually do that.
Yeah.
And
so why would they be doing it?
Yeah,
then?
So they are pushed to do that, or they are told to do that because they are told that if they buy property in a trust and the rent covers all the costs that are in the trust, we can then ignore that debt and buy something else.
Okay.
Ignore that debt, buy something else. The issue is it's rare that the rent would cover all the debts, and we end up with people having 3 or 4 properties in trust that are not covering anything, and people struggling because behind the trust is still the individual. Sometimes on paywaji
who's
income.
recommending this?
Or a lot of it are buyer's agents, obviously, to build people's big portfolio. And I guess in practice, the thing is it could work, but when there are people that don't have the income to back it up for years before the strategy come to place, it gets very tricky. And I think that's what's happened to Macquarie. Their book on trust is not looking too healthy, I would imagine.
Okay.
I would imagine. That's my vision.
So were Macquarie really in deep with trusts up until that point?
Yeah, they positioned themselves as a trust lender for quite some time.
So this is a huge about turn.
Yeah,
they were
really good with trust. So massive turnaround from them. So yeah, that's big news. I expect others to do or slow it down at least.
Are they the first to have this about turn?
To be like black and white, yes. Yeah. But we've seen in the last year or so, like Westpac, St.George, really not liking them, not pricing them, making it difficult to land in a trust, and they're just very hard as well to go through. There's so much paperwork to do. So yeah. On the other hand, we got an email pretty much on the same day from CBA saying, hey, we're happy to apply negative gearing in a trust, which is completely the other side of it.
We'll take a quick break there. We'll look into that a little bit more detail and maybe have sort of a bit of view as to what the trust borrowing landscape looks like, and you know, maybe consider if you know, what the future looks like. Don't go anywhere. Welcome back, Alex Whitlock, ever with you. Broker Daily Uncut, unpacking the move from Macquarie Bank to pull completely away from trust lending. I know that that Finni focuses it on in the investor market. What percentage of your clients typically have some sort of trust structure?
Yeah, so a lot, because you know, you always hear like most investors only have 2 to 3 properties, and it is true that if you really want to go over that on the PAYG income, let's say the average or a bit more, it would get very difficult to keep going if you bought everything in your personal name.
Yeah.
And when the interest rate was so low, like 3 years ago now, the trust solution was quite easy to achieve and just move on. So we've got quite a big portion of that having trust. And for some of them, most of them, it works. But for some of them, we can also see that if the rates were to go up, or they would lose rent for some time, or something would go wrong, it would be very difficult for them to maintain what they have.
So I guess there's two sort of liabilities here. One is for the borrower, for the purchaser, and the other one is for the lender in terms of sort of operating in this particular structure. You'd mentioned just before the break that CBA, on sort of within hours of the Macquarie Bank announcement, the CBA stepped in. Do you just want to give a little bit more detail about sort of CBA's position and what it is that they're offering?
Yeah, so when you actually do your tax return, you cannot apply negative gearing to a trust. So really, if you don't put a property there that's positively geared, you're losing a lot of benefit of how much tax return you could get if that property was into your personal name. CBA is saying we will apply negative gearing to your servicing capacity if it's in a trust, really boosts in a way that it's not real the capacity of someone's borrowing.
Yeah.
So it's completely the opposite side of like, let's say Macquarie that say we don't want to do trust anymore. However, that position is taken a lot by second or third tier lender like First Mac, La Trobe. They all pretty much do that. Obviously, their appetite for risk is higher.
So it's an interesting sort of split with most of the majors, if not all of them, apart from CBA, out of that space, CBA in that space. But obviously that it's an arena that the non-banks are very effective at playing in. Do you think that CBA will stay there and remain there for the?
Well, look, hopefully they do make it hard though in some ways when you apply, let's say, for a trust or in your personal name for the other trust you may have outside of that. So they're quite rigorous in their checking that trust that you want to ignore is actually positively geared. So I guess the view that Macquarie has is very extreme. They could have stayed in the game, just making it a bit more, more checks, more documents, making sure that it is actually positively geared, and a letter from the accountant might not be exactly right.
It's interesting to look at who is driving recommendations about what structure investors purchase in. Buyers agents they're sort of, there's no real barrier to entry into being a buyer's agent. They're certainly not accountants, or generally not by trade. And it's interesting that you've got fairly unqualified people recommending complex structures for customers to purchase in. What do you think the future is for investors? From your experience, do you think that do you think we will still see people using trust structures to purchase?
And there's definitely a place for that.
Yeah.
I think it just, and often actually when people do consult with their accountant or financial planner, they are told you don't need a trust, so that's not going to work for you. I think people probably just need to be more aware of why and the consequences of buying in a trust. And it's just not for everybody. And we've been saying that in this podcast and SPI podcast for a long time. But there's definitely...
Do you see many borrowers coming to you that are purchasing in a trust structure where you think there's just no need for this?
Yeah.
Do you ever give feedback to your customers?
Yeah, I would say, look, it only works if maybe you should talk to your accountant. Just make sure you understand the whole...
Yeah.
I can't go against it if that's what they want to do. If the financial planner advice for this, that's fine. There is definitely some instances where I think it's probably not the best way, but that's not for me to decide.
Just stepping away from sort of the investor market, and look, it's very interesting to look at this particular sector. Just looking more generally, since I've been away, there've been some changes in terms of the economic outlook. We were kind of looking. There's a reasonable likelihood of a November cut that now looks to have evaporated. What are you seeing in terms of investor confidence, buyer confidence, borrower confidence? You're still seeing the same, despite the fact we're looking at maybe another rate cut getting kicked down into 2026?
It's still quite, I almost want to say there's FOMO there happening.
Yeah.
And the investors following, I guess, the first home buyer grant and all that thing that's happened, thinking, well, they're putting a lot of, buyers in the market. Obviously, prices are going to go up. They want to get in. So yeah, that's definitely what we see. And then there's always this psychological thing, it has to be done before Christmas.
Yeah.
And we are in that timing now, 6 to 8 weeks before.
The spring's well and truly in the spring. Well, sort of drawn towards the end of the spring selling season. It's auction clearance rates have been sort of generally ticking up. It was a bit of a funny weekend this weekend with, the Melbourne Cup. Melbourne auctions were way down. I think from memory, I think auction clearance rates in Sydney were around about 70%. It's kind of a sort of a bit of a patchwork market. You've got some quite hot suburbs, some quite hot markets, others maybe less so. But everything to me feels like there's going to be sort of continued positivity. But you look at a lot of the capital cities. I mean, they're already up high.
And everyone was talking about Victoria for quite some time. It looks like Queensland is actually kicking back.
Still going.
Yeah,
it's incredible.
Yeah,
I would be interested. I don't know whether you'd be qualified to tell me what drives the Queensland market. You've obviously got sort of upcoming Olympics, and I would imagine sort of general migration. But it's an expensive city now.
Yeah, I think
Brisbane particularly, as opposed to the state.
Yeah, I think it's just a nicer place to live than Victoria, maybe as well.
I don't know about that. Be careful.
I don't know. I wouldn't know enough to judge the city as a living.
You've got a different lifestyle up there.
I
think you've got people. As long as I've lived in Australia, certainly in Sydney, people who've been approaching retirement often look at cashing in on their Sydney property and moving up to Brisbane or the Gold Coast. But now, looking at the change of value, it's not quite as attractive as it was sort of 20 years ago.
No, but and
you got a slower lifestyle up there. Like typically, particularly sort of outside the CBD in Brizzy, it's a slower pace of life, and I think that's attractive to a lot of people.
Yeah, look, I'm not exactly sure. I haven't thought about it, like what actually drives people to move up there.
But it's I'm amazed that it's still going. I look at Melbourne, and just the I don't know, what is it, the 5th or 6th sort of median price capital city now. Yeah, Adelaide more expensive. It's wild.
It's weird. It's actually weird. Did you pick up?
I will take a quick break there. Back in a couple of minutes. Welcome back. Great to have you with us again, Alex and Eva. Broker Daily Uncut. One thing I want to sort of pick up with you. I know that for the incentives for first-time buyers with the government scheme, there was a sort of a reduced or no LMI proposition from the government. I caught up with one of the LMI providers, and they were sort of quite concerned about that development. But you mentioned off air that there's another lender has come in with a no LMI product.
So that was one of the big other news that happened while you were away. UBank has just announced that they would do 90% no LMI, not just for owner-occupier, for investor.
Really?
As well. That's big.
That's really, really big.
Yeah,
I wonder what's driving that.
I guess market, they're hungry. And just like Pepper a few weeks ago had 90% no LMI for SMSF. 90% no LMI SMSF. That's pretty
That's sharp.
That's wild as well. So, yeah, you see bank just closing doors, you see bank opening doors. And I think in general, it's becoming easier, or, banks and lenders are hungry for more business.
What do you think the risks are? Looking at the broader market, LMI is an important function. Do you think this is the end of LMI, or do you think that do you think that all lenders will move in this space? Because they can move out very quickly, but if there's an impact, LMI providers have to do business to be financially stable, right? And if you erode,
look, they're just one lender, right, out of many.
But if you've got a government incentive. I mean, typically first home buyers, it's usually those with a smaller deposit that look to take out LMI to help them, sort of get above that 80% purchase. So if you've got the government already supporting first home buyers, if you've now got
lenders,
you've got UBank looking for market share.
Yeah, I feel like they have a very large confidence in what the market's going to do as well. That gives you an indication.
Well, it does,
of what they're thinking.
Because there's risk, right? You're pretty confident that the purchase that you're funding are going to appreciate that. You're leaving yourself a 10% buffer.
Yeah, and then you see more lenders self-insuring themselves as well, and it might be absorbed into an interest rate or a fee. Who knows? LMI might not be forever.
Yeah, it would be interesting. I think elsewhere in the on Broker Daily to get some. Some insight and get some feedback.
There would be other ways to do it. It doesn't have to be an external provider. Banks could do it in a different way. Consumers could provide a different way to insure the property. I don't know. There could be a lot of different options.
Because of the rise in value of property across all markets, it is getting harder to raise, sort of a 20% deposit. Right. I mean, if it's your first purchases, I won't go quite so far as say virtually impossible, but certainly for for most borrowers, you're talking a huge amount of money at 20% in terms of median prices. So
So if it's not mom and dad giving money or family pledge or the 5%, it's quite interesting. I also found out completely missed that information is. If you do actually have more than the 5%, you do not qualify to apply for
the government. Is that right?
Yeah.
So if you've got more than 5% in your savings elsewhere, they won't.
Yeah.
Wow. If you choose to just put your 5%.
So you think, if you have a buffer, that's all. That's all right. But then I'm thinking, if you only manage to scrape the 5%, can you actually maintain a mortgage at 95%?
It's a very interesting point because in terms of and looking at first time buyers, right, you don't understand the realities of the stress associated with meeting mortgage commitments. And I've taken out many mortgages and I still amaze myself at going, I'm redlining it, when things get tight, it's stressful. I'm kind of used to it. When you take out your first loan though,
I don't know.
It's real pressure. So that's an interesting point. I would assume
on a lot of cases the mortgage repayment would be higher than their rent.
Yeah.
And yes, the rent is going to be gone, but there's more than there's your electricity, there's your water, there's your rates notice, there is maintenance. There's a lot more that will come out of your wallet than if you're renting.
Yeah, and I guess rates should be still in their downward trajectory, albeit maybe not as quick as we might have hoped.
I don't know.
There's no guarantees.
That we are at the bottom.
Sorry?
There are talks that we are at the bottom of that cycle.
Really?
I don't know.
Yeah, it'd be interesting.
I've read a few things about that, yeah.
Well, you'd not want to be in an upward cycle next from here. I kind of think...
No, but it probably would be flattish for a while.
Yeah, I kind of think that there'd be more... I instinctively think you'll get one or two more cuts next year. And then,
it's slow. It would be
sort
slower.
of flatten out.
Yeah.
Yeah, it's interesting marketplace at the moment. But look, there's as you say, there's still seems to be, or there is a building momentum for buyer appetite. Yeah. I think there's
always an opportunity. Like it doesn't have. I don't know why people also are so stuck into buying their home.
Yeah, I said it's the Australian thing, right?
I guess
people like to buy their home. But I think there's a lot of utility in making an investment purchase. First, I know that you're going to be helping my daughter Lizzie purchase her first investment property. I mean, she's where she lives in Sydney and where she would like to live in. She rents in Surrey Hills. There's no chance that she can buy. She might be able to buy an apartment in Surrey Hills. But I think she's looking at the opportunity to buy as an investment and then sort of feed back and then buy the place that she wants to live further down the track.
Yeah, that's right. But that's what I mean. Like it's if people knew maybe a bit more about investing and they could get to that property they really want a lot earlier if they invested instead of just saving and chasing their tail until they can actually
This is the issue that I got with the buyer's agents, though. Look, they provide a valuable service. I always use a buyer's agent, but I go back to 25 years ago when I bought property for 30 years. I've made some mistakes. Even recently, I'm not infallible, but overall, it's a good long-term wealth building strategy in terms of investment. But when I came here, so 25 years ago, there were a couple of investor magazines, and they were just misleading. See how I built a $4 million portfolio in just 18 months, and all this kind of rubbish.
We still have those.
We do, but it kind of like dissipated a little bit. The reason we launched SPI was to give warts and all every single cost that's factored in, the reality about what your net returns are once you've taken out all of the various overheads. But I get this with this growing buyer's agent spruiking kind of scenario. You're getting a lot of the rubbish factored in. Buying's harder now. Buying. Being an investor, so the taxes, the costs around it, probably more than I've ever known before. And I think it's, we're in an interesting environment that you can believe the hype because people want to believe it, right? When they're sort of looking to sort of build wealth.
It's a shock. I've had a few investors quite shocked buying property in Victoria, not really realizing all the rules around what needs to be compliant in the property and how much it costs to put a 70s properly back into being compliant. And
I've just
it's a shock. It was a shock to them.
I've just completed a purchase in Melbourne, and holy smoke, it's ridiculous. So the agency sent me through the compliance stuff. It's off the dial.
Yeah, it's a bit. They've gone too far.
It's interesting.
But for a lot of people, that is a shock when they haven't been told that by their buyer's agent.
Yeah,
and it can be a lot of money to just put it back to what it needs to be. Even certain type of curtains and this and that. It's like, oh my God, really?
Yeah. It's I think we're interesting. You've got the rise of buyer's agents. There's a lot of them around, maybe a couple of thousand now, look, and
some are great. Some are really,
absolutely.
Yeah. We're not, it's just, some don't really tell their clients what they are up against as well once they do buy the property.
All right. Eva, thank you very much. Good to catch up. For everyone else, thanks so much for tuning in. Love having you with us. I hope you find the show enjoyable. Give us your feedback. You can contact us at editor@brokerdaily.com. We'll catch you next week. Thanks, Eva.
Thank you.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.